Jai Hind everyone. Welcome to my YouTube channel which is explore yourselves, banking and general knowledge etc. Today I am going to describe about RBI's pension rules. Every retiree must know important operational instructions, joint account facility and safety measures. Introduction. Retirement is the beginning of a new phase of life where financial security becomes the highest priority. For millions of central government, state government, defense, railway, and other eligible pensioners, monthly pension is the primary source of income. To ensure a smooth, transparent, and timely pension disbursement, the Reserve Bank of India has issued comprehensive guidelines for all agency banks through its Master Circular on the disbursement of pensions by agency banks. These instructions are meant not only for banks but also for pensioners so that they can safeguard their pensions and avoid future disputes or inconvenience. Objective RBI guidelines. The RBI Master Circular consolidates various operational instructions issued over several years regarding pension payments. The main objectives are timely credit of pensions and Dearness Relief (DR), uniform implementations of government pension orders, prevention of fraud and fake pension payments, better customer service for senior citizens, protections of pensioners' interests through standardized banking procedures, transparent handling of pension divisions, arrears, and family pension. Timely payment and dearness relief here. One of the important responsibilities of pension paying banks is to ensure that revised dearness relief announced by the government reaches pensioners without unnecessary delay. RBI has instructed banks to act immediately upon receiving the government orders instead of waiting for further communications so that pensioners receive revised benefits in the very next pension cycle. Importance of nomination. Every pensioner should ensure that a valid nomination is available with the bank wherever applicable. RBI has advised banks to accept prescribed nomination forms so that arrears of pension can be paid smoothly to legal nominees without unnecessary legal complications after the pensioner's death. Special recommendations for every bank pensioner. Opt for either a survivor joint account. One of the most practical facilities introduced under various government pension schemes is the option to receive pension in a joint bank account with the spouse. Wherever permitted under the applicable pension scheme, the joint account may be operated either a survivor, the farmer or survivor basis. Why either or survivor is highly beneficial. Every pensioner should seriously consider converting the pension account into an either or survivor joint account with the spouse wherever the pension payment order permits family pension authorization. Major advantages include immediate financial access for the spouse during emergencies, no interruption in day-to-day banking operations, easier management of pension funds, better support during hospitalizations or old age, simplified account continuations of after the pensioner's death, subject to applicable family pension rules, reduced operational difficulties for senior citizens. The RBI Master Circular extends this facility across several pension categories under prescribed conditions. Important conditions every pensioner must remember. Although the joint account facility is extremely useful, certain important operational conditions apply. Pension is payable only during the lifetime of the pensioner. Death of the pensioner should be informed to the bank immediately and preferably within 1 month. Any excess pensions credited after death is recoverable. Legal heirs, nominee, or joint account holder may be liable to refund wrongly credited pension. Government's liability ends once pension is credited into the bank account. Payment of pension arrears continues to be governed by nomination rules. These conditions are extremely important and every pensioner as well as spouse should understand them carefully. Very important advice for every retiree. Carefully verify operational instructions. Apart from receiving pension regularly, retirees should also pay close attention to the operational instructions of their pension account. Before retirement or immediately after opening the pension account, every pensioner should verify mode of operations, single or either survivor or former survivor, nomination details, family pension authorization PPO, mobile number, other linkage where applicable, PAN details, signature records, KYC status, address, life certificate submission procedure, bank account mandate, standing instructions, passbook entries, pension slip details, PPO updates after pension revision. Ignoring these operational aspects may create avoidable problems for the spouse or legal heirs later. A few minutes spent reviewing these instructions today can prevent significant inconvenience in the future. Banks must update PPO and issue pension slips. RBI has repeatedly instructed banks to update both halves of the pension payment order whenever pension is received, revised, issue pension slips whenever there is a change in pension, ensure pension calculations remain transparent, properly record revised pension and dearness relief. Pensioners should verify these updates periodically with their branch. Protection against fraud. The Master Circular contains detailed safeguards against fraudulent pension payments. Banks are required to verify PPOs carefully, follow prescribed procedures, and prevent payments based on fake or unauthorized documents. Pensioners should also remain vigilant and report any suspicious activity immediately. Special care for senior citizens. RBI has directed banks to provide additional assistance to old, sick, disabled, and incapacitated pensioners. Special procedures have been prescribed for those who cannot visit the branch or sign withdrawal forms, ensuring they continue to receive pension without unnecessary hardship. Compensations for delay. If there is an undue delay in crediting revised pensions or pension arrears, RBI has instructed pension paying banks to compensate eligible pensioners for paying interest for the delayed period without requiring the pensioners to make a separate claim. This reflects RBI's commitment to protecting pensioners' interests. Good banking practices every pensioner should follow. Every retiree should keep PPO safely, maintain updated nominations, inform the bank immediately after any change in marital status or address, verify pension credit every month, preserve pension slips, inform the bank promptly in case of death of the pensioners to avoid excess credits, regularly review account operation instructions, educate the spouse regarding pension procedures, stay alert against fraud and fake calls. Conclusions. The RBI Master Circular serves as a valuable guide for both banks and pensioners. While banks have the responsibility to ensure timely and accurately pension payments, pensioners must also remain aware of their rights and responsibilities. Opting for an either survivor joint account, maintaining proper nominations, reviewing operational instructions, and keeping banking records updated can greatly reduce future difficulties for retirees and their families. Awareness today can prevent financial stress tomorrow. Disclaimer: This article is prepared purely for educational and awareness purposes based on the RBI Master Circular on Disbursement of Pension by agency banks and related operational guidelines. Pension rules may differ depending on the pension category, government department, PPO provisions, and subsequent amendments. Readers are advised to consult their pension-paying bank, treasuries, CPAO, Defense Accounts Office, or the concerned government authority before taking any financial or operational decisions regarding their pension account. Thank you very much for your patience. Request for like, subscribe, and share.